Nobody warns you that the day you become your own boss is also the day the IRS quietly becomes your most demanding business partner. And unlike your clients, they don't care about your cash flow problems. They just want their cut on time, every time. Here's what blindsides almost every first-time small business owner. You didn't just change jobs. You changed your entire relationship with money, taxes, and the government in one signature. The moment you go from W-2 employee to self-employed, you step into a world where nobody withholds anything for you, and that silence from your paycheck is not freedom, it's a ticking clock. Let's talk about the self-employment tax, because this one hits people like a freight train they didn't see coming. When you were an employee, your employer paid half of your Social Security and Medicare taxes, roughly 7.65%. But now that you're the boss, congratulations, you pay both halves, which adds up to 15.3% before federal income tax even shows its face. Think of it like this. You used to split a dinner bill with a generous friend, and now that friend moved away and you're paying the whole table. The cruelest part is that most people don't discover this until they owe thousands of dollars they already spent on, let's say, business expenses like that monitor that was definitely for work and absolutely not for gaming. The quarterly estimated tax payment system is the unsung villain of year one, and almost everyone misses at least one. The IRS expects you to pay taxes 4 times a year in April, June, September, and January. And if you don't, they charge you a penalty that feels petty, but adds up like a bad subscription you forgot to cancel. Here's the mindset shift that saves people. Stop thinking of your revenue as income and start thinking of roughly 25 to 30% of every dollar as already spoken for. Open a separate savings account. Nickname it Not My Money, and transfer that percentage every single time a payment hits your future self. We'll send you a thank you card, possibly in tears. Now let's talk deductions, because this is where people either get very smart or very audited. You can deduct legitimate business expenses, home office use, mileage, software, health insurance premiums. But the key word is legitimate, because writing off your family vacation as a business retreat is a story that ends badly in a small beige room with a federal agent. The home office deduction is one of the most underused and most misunderstood write-offs available to small business owners. To qualify, the space must be used regularly and exclusively for business, which means the kitchen table where you also eat tacos does not count, but a dedicated room or even a clearly defined portion of one absolutely does. One of the biggest psychological traps of year one is conflating being busy with being profitable. You can invoice $50,000 and still owe money if your record keeping is chaos. Accounting software, even the basic kind, is not a luxury for when you grow. It is the foundation from which every smart tax decision is made. And starting it late is like trying to write a diary entry about 6 months ago from memory. Here's a historical truth that every seasoned entrepreneur knows. The businesses that survive aren't always the most talented. They're the most organized around their numbers. Tax time becomes a non-event when you've been categorizing expenses monthly, saving receipts digitally, and reconciling your books. It's boring discipline that pays dramatic dividends. Address the fear head on. A lot of people avoid filing or delay hiring an accountant because they're afraid of what they'll find out. But the IRS is far more forgiving of honest mistakes corrected proactively than they are of silence. And a good CPA or enrolled agent often saves you more than their fee in the first year alone. Don't let perfect be the enemy. A file to return with minor errors you correct later beats an extension you forget to actually file behind it. Discipline in small business taxes isn't about being a numbers genius. It's about showing up for the process consistently, sizing your obligations correctly, and never letting urgency replace strategy. At its core, filing your first small business tax return is a rite of passage that reframes how you see every dollar you earn. The owners who come out ahead aren't the ones who earn the most in year one. They're the ones who understood the rules of the game before they started playing. And if this is the year you're building something real, whether that's a business, a property, or a financial foundation, we can help you get started in real estate investing, home contracting work, and finding lenders. So check out our links in the description below.